Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance face draw down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance base draw down, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Welcome everybody, Seacrest Markets. Happy Friday. What the is this music? Well, Born to Do It, 8744. That is the intro designed by our very talented marketing team. I think it could hit top 10. I do genuinely think it could hit top 10. How is everyone this week? Where are you all tuning in from? What part of the world? What country? All right, so cool, there's quite a few of you on the stream across X, YouTube, Facebook, which is always good to see. I will make my charts bigger momentarily, as I know some people are viewing it on smaller devices. Look at my hair. Some people are viewing it on smaller devices, so unfortunately they won't be able to see everything. As for overall week, I always like to break down what's going on in the markets. So let's take a quick recap and trip down memory lane. Yesterday's market summary for you. I've got my notes in front of me. Following Greenland tariff cancellation, which we discussed yesterday in the pivot in Davos alongside US data, where we've suspended the 10% tariffs now until at least February 1st, which are there. The security framework agreement with NATO regarding the Arctic, US economic data, GDP Q4 2025, surprise to the upside at 4.3% annualized. We mentioned this could be the scenario with some economists coming out with even higher data, which all that does, right, is fuel potential upside momentum long term. If you're not long in the US markets, you're wrong. What it does as well for the US economy is purely specifically show and confirm that the US economy remains the global growth engine, right? So still strong economy. There's a saying that me and a few of my investor friends always discuss, and it's never bet against the US. It's very difficult to be short weighted indices that are continuously reweighted and rebalanced, and companies that are underperforming are deducted and companies that are performing are introduced. So if you're running a semi-active portfolio or you're running an index ETF and you're investing into that, or whether you're just investing into it, you're going to be investing into the companies that are strongest in the US that are growing. That's always going to be the best for you. If you look at how the Nasdaq's performed over the last 10 years, how the S&P's performed over the last 10 years, it's been very easy to get in. You know, we've seen very easy investment markets. So US is still chugging along. PCE inflation. So we had 3 data points come out yesterday. I called them the triple threat in yesterday's live stream. We had US GDP for the advance. We had PCE inflation. We had jobless claims, right? PCE inflation, which again, Fed preferred gauge, came in at 2.8% year on year. So slightly sticky, but it did come exactly in line with expectations. So what that will do for the Fed is prevent hawkish panic. And then the final one, jobless claims, remained low at 209,000. So what did it show? We discussed it yesterday, that the labour market is refusing to cool down. So we're still a bit hot. Data's very hot. US economy is still very strong. Good global growth engine. So in terms of overall market, you know, we could see in front of us, if we just come out to the daily quickly, this is purely the S&P. We had a nice bullish day. Obviously, US markets extended all across. So the Dow closed up about 0.5%, about 0.6% from memory. So around that 49.4 mark. Of course, it's been trading since there across the CFDs. And we saw, so I hold Intel, which is ticker INTC. And we saw huge inflows into tech stocks like TSMC, like Intel, which is $INTC on the ticker. The DAX, which is our preferred instrument during the European session here at Seacrest Markets, it reclaimed that 25,000 level, ended the day at 25,120. Again, based on the following, which was the removal of the tariff threats, because obviously it takes a lot of weight. Why? The DAX is heavily geared up with constituents that are export driven, right? So it takes a massive weight off their shoulders if there are no tariffs implemented on their exports. And then one of the most popular indices outside of the US and the DAX is the Nifty 50, which is based in India. That rebounded from what we would consider as extreme oversold conditions to trade back at and above 25,170 as well. So still sensitive. And why is it still sensitive? And we discussed this. It's still sensitive to foreign institutional investor selling. Investors are looking to kind of get rid of their exposure in the Nifty. But overall, some very, very, very good moves in the market. So I hope many of you, whether you're listening to the live stream or whether you're listening to the recording, capitalized on that upside move. Where are we? In terms of trades, what's everyone looking at? Are we looking at indices? Are we looking at Bitcoin? Are we looking at other cryptos? Are we looking at metals, gold, silver? Are we looking at FX, be it the DXY, maybe just euro dollar, maybe dollar yen? What are we looking at? And whilst I wait for some comments, I'll drop a message. I'll drop a note on realistically where I'm seeing things. So let's go to DAX 40. I'll just do it like this. It's a lot easier. So DAX 40 still bullish, expectations to trade higher. We haven't taken out anything on the daily inside this previous leg higher that could suggest that we're shifting to bearish stance. Obviously, internally, there's going to be a lot of structure internally that we could take a look at to see what's happened. There is still that huge gap down that we need to be aware of from the open on Monday, which I'd like to see that gap get filled. So we'll see as we trade into next week if we can get that filled. I'm not expecting us to try and actually fill that today. Doesn't look like we want to really, unless we pick up some vol. I mean, yesterday's candle was bullish, but we're still trading inside Tuesday's move. Sorry, my apologies. Wednesday's sweep, inside day. So let's wait and see how we develop out on that. Let's trade down into the 4 hour, see if we can actually identify anything. So 4 hour starts to give us a little bit more color on the fractal left here. We do have areas of demand, but nothing is really standing out. This is the only area to me, or this that's standing out. But obviously, I prefer looking at the absolute. So if we come down to the extreme range on the 4 hour, you can see that this is actually the extreme that caused the move to break. This was the high. So we could start to look at something in here. Whether we take the imbalance and actually take into consideration and factor that wick, just because we might as well take the range. We've then obviously got a reaction off this level here, which was shortly lived. We then continue to the downside. So if demand wanted to take control at this point from this level, which clearly investors didn't like or traders didn't like, if we actually look at this leg, we'll actually see where we are on the leg. So we were just coming into the discount after the EQ on this move. So price, realistically, for me, I like to look at trades that are at least, I'm just trying to see where, let me get this move again. Let me do this. So I like to look for trades at least from this level. which means I wouldn't be in anything. Had I have been looking at the DAX from rollover into Asia, which I don't do, I would have been looking to see if price can come back down into here and get long, but unfortunately we're not. So a couple of ideas are that because we haven't really come into the extreme yet, there is that chance that we actually trade lower into 24,000. It's going to be very difficult because we do now have a lot of bullish rhetoric. The tariff news would have actually allowed us to trade into this level. So what we do need to see happen on a higher time frame is the markets base themselves and build something to the right. So we now need, after this move to the downside, we do need some form of market structure to actually develop. So it could take until next week for us to get in any type of confirmed move on the higher time frames around this area. For me, I need to see that move kick into place. I'm not really a trader that calls the bottoms or trades from the tops. Early in my career, 17 plus years ago, in terms of when I was probably trading tops and bottoms, I would have been burnt significantly. So you learn from those mistakes, and you're trying to trade with absolute precision, and you could have the shittest entries in the world and still make money. It's all about understanding where your risk is and where your average true range is, really, if you're looking at intradays. No worries. So nothing done in the DAX. Does anyone have any? Let's go out to the let's break down 15. Let's go down 1 hour. Let's break down all the time frames. Let's have some fun. All right, so you can see really as we start to trade into that 15-minute from that high. And there's so many trades. Wow. And this is, when I was trading London session and European session, this is why I was trading DAX. And the only reason I'm not really trading European session anymore is time. I mean, I could trade it on live sessions. That wouldn't be too much of an issue. I could trade it around that time and because of course, European Open is, I usually used to check around 7 a.m. my time, so 7 a.m. UK GMT. But there's so many trades. So when you're just looking at volume, obviously the ATRs move to the right-hand side, but you can just see the point of controls, managing the extreme controls. And then when we get that shift up, so when we get, on the 1 hour, this is still, of course, not your higher time frame, it's still your mid-intraday. But once you start seeing the breakdown, we have this. So this is what we call unconfirmed bearish, right? Because it's taken out that last point of demand. Now we're looking for supply to be respected, which we get, right? But then what happens is we fail to take out this low. So there is an expectation that this high is weak. So we should come back into it and take it. Now, I don't know. 1 second. No, it hasn't. So we should take out this high. We haven't. So then that's why we start ranging, right? Because we've got no clear direction. Market obviously closes sideways. We open lower and we continue to the downside. bearing in mind you're just trading with momentum at this point. So on Monday, when markets open bearish and we realized that this could get a lot worse on the tariff situation and cross Davos for the week, we're looking at supply holding after a sweep. So we've got the gap open sweep filled. Supply then obviously takes control, demand fails. We then see supply in control. And then we could look for shorts somewhere in here. So again, I'm never in the first part of the move from here. I'm always in probably from the first quarter. So going into Q2 down to end of Q3, that's where I'm always positioning. So short from here. Now, theories that gaps will probabilistically get filled. We have to be mindful of that. So our stop placement is key. We need to take into consideration, all right, is there any open risk? Where is, the opening of the VWAP trading? Okay, it's here, very tight. So price is actually trading below the open and below the low. So we can have our stop here, that's okay. First target for most traders I know within Seacrest will be trading 1-to-1s, 1-to-5s. So let's just highlight them and see what we can get. There's 1-to-1. There's 1-to-5. There's 2 into this level. And then maybe most traders would start trailing out. If you're holding for your 1-to-3s, 1-to-4s, they're still available. Look, 1-to-3, 1-to-4 is available. Maybe 1-to-5. Ooh, no, 1-to-4.5. Good morning, Unhunt. Hope you're well. I can't see your full name, so actually it looks, yeah, it is Unhunt. So yeah, there's actually a really nice trade on the 60-minute time frame. So if you're not trading 15-minute, 5-minute, 2-minute, 1-minute, perfect entry there. And it moved. So a really, really nice swing trade in terms of the days, because it trades through Monday into Tuesday. Again, on CFDs, you can hold overnight. You just need to factor in the swap charge in your position. And of course, any commissions, which are factored in anyway. I know that probably none of you are from the US. I heard there's going to be snowstorms in some states overnight. So when they wake up this morning, there will be potential snow across Florida, I believe. I think. Job for funding traders. Yes, Seacrest Markets is formerly My Funded FX. My Funded FX was established in 2022. We've paid out over $56 million to traders. We offer 5K challenges through to 100K challenges. Our 100K challenge is 75% cheaper than the majority of the top 10 within the market. Our 500K challenge is $500 for $100,000 in challenge funding on our step 2 challenge, our 2-step challenge. And I think our closest is $529. Again, we've been in the market since 2022, paid out over $56 million. Traders trade on MT5 and Match Trader. We have a 1-step plan, a 2-step plan, and a 3-step plan active. And of course, as you know, we also have CFD brokerage. So our Seacrest Markets CFD brokerage as well. So you can trade all of the instruments on your own personal account. Minimum deposit is $50. And that's USD. Let's go down into the 15-minute because we've seen a setup on the hourly. Now let's take a look at the M15. Let's actually just take a look at current price action because we're trading in a range and I want to show you something. So we've had that huge bullish move. So we've got what we would call a flag pattern developing, okay? So if anyone is aware of patterns or they're aware of accumulation and distribution theories, we are currently trading inside this accumulation. Now, what we would expect based on said patterns. Now, I'm not a pattern trader. I'm just highlighting this from an analytical perspective. We would expect our move to be the length of the pole. So if we do break out, the expectation and target will realistically be around that 25,300 level as our upside target, which, coming back to the earlier comment, will fill the gap to the left. So at the moment in time, let's look at M15PA. We have lower highs being printed in the market. We had a failed break to the downside, like here. Because we're trading in a range, both supply side and buy side are weak. So both sell side and buy side are weak, okay? Because we're not trading and creating structure. The one consideration to that is we have had this sweep here. Now, this sweep has failed to take out that structure. So it's not a confirmed sweep. And unfortunately, we're just ranging. So what we need to see is the following. We need to see, and it's going to come in many forms. It's not going to be clean. It's not going to be textbook like I'm going to show you here. So that's, of course, the downside, the move to the upside, the break. And then this is the downside, right? Now, again, could happen in many, many forms. We could see price breakout, sweep this low, and then we could see this. Now, if anyone's aware of Wyckoff theory, this is one of the Wyckoff plays. It's not always as clean as an expansion and then a jump over the bridge, retest, and then a continuation. We do get messy scenarios. So there could be 6+ variables to this breakout, right? The most obvious ones are the initial vanilla move I showed you, times 2, which is obviously 2 of the moves. We then have this move here, which again is one of the 2 moves, because we may get this. We then recover. We trap buyers into the market, and then we get short. So there's 2 of the moves of the 6. So that's 4. And we could, unfortunately, get breakout to the upside, traps buyers, sellers step in. We then break out to the downside and then start shifting to the upside. So very, very extreme. And that would be obviously 5 of the 6th. And then, of course, we inverse that to be the 6th of the 6th. Yes, there are more. And the reason I say there's more, because sometimes the market will just keep moving sideways. And that could be deemed as an accumulation or as a distribution, right? And if that happens, the longer that goes on, the weaker that channel becomes. And it kind of almost puts us in a position of, well, realistically, what's going to happen on this distribution now? Sellers and buyers are equally matched. We need, obviously, to see volume. And this is where using volume profile, this is where some form of bookmap or other third-party software where you're utilizing volume, DOM, understanding what's actually going on in the market, whether it's where resting orders are or where active orders are stepping into the market, so you can position yourself better. So M15 right now, there's nothing to do. I need to see a breakout in order to get long or short. Expectations based on patterns would be for price to continue to the upside, trading up at around 25,300. So those of you that trade DAX during European session, well, it could be a quiet session today, unless you're scalping from the highs to the lows in this range, and that is okay. As long as you're trading from the extremes, they are the higher probability plays in the move. I'm just going to expand and zoom in for you all, because I just realised I didn't do it now it looks like a child is drawn on my charts even more. Let's take a look. So there's no point, until we get some levels break out of this, it's probably realistically that we have to wait. We're trading under EMAs. US session will give us some moves, I reckon. again, longs off of this, we do need to be careful of this supply here, just because, okay, because demand failed to the left. Yes, overall long term we're bullish, supply is weak, demand is in control. We just need to be considerate that this could cause us a reactionary level. We don't necessarily want to be getting long inside a supply. We'd like to see a pullback to get long into this supply. Of course, our overall target is 7,000 plus anyway, which I've discussed every live stream. So we want to see us trade above this level, creating new highs. And there'll be a lot of volume stepping into that level because we want to see 7,000. Because as soon as you get that 7,000 level, 7.1, 7.2s will come very quickly. So let's quickly look at the 60 minutes. So gap filled, as you can see. I haven't even drawn that on. That was drawn on earlier in the week. So we've got that gap fill. We have demand in control. This is a massive level. It's very, very big. So I'll just mark that out so you can see the interaction. Now what we need to take into consideration is this. This low here failed to take this higher. Clearly, once we've traded into the gap, completed the closure, sellers have stepped into the market. Hence, we're now pushing down. This low is weak. It doesn't necessarily mean it's going to fail. But this low is considered weak. So we could now actually see the market trade lower and look for something on the left. Like this looks nice, I'll be honest. This looks very nice here. Now we do have to take into consideration that huge Marabuso, that huge engulfing candle, which some people call balance or IFVG. So that's a big level that we need to look at. Let me just clean this up a little bit so we've got some. So it could be that we just start taking profit going into the weekend, because what's happened recently, Trump comes out and mentions tariffs in Davos. Trump mentions that the US is heading towards Iran. So often we're seeing weekend risk, and holding risk into the weekend is problematic at the moment. We're seeing gap risks a lot. Look at the gap risks of the downside here. That happens pretty much across every industry. Gold to the upside, indices to the downside. So if you're a swing trader, you have to be prepared for holding over the weekend for that. Okay, so go down to the M15. Let's get some flavour. Also, I just touched 15 in the chat box that I shouldn't have. Hang on a second. Oh. Very quiet in here today. Is it because it's Friday? Do people not wake up on Fridays? Do people not trade on Fridays? Good morning. So, again, higher lows, lower highs. Sustained weaknesses inside this, so we could actually look to play the overall momentum. We could actually look to get short in and around this level, which is very difficult because I don't like shorting. We could look for something in here. First target for many of you will be one-to-ones I've touched upon, so you'll be looking at something like this. Just let me see. There's no volume in here, none. So there's a lot of volume here. So you may, depending on your stock, you may not be able to get your one-to-one because there's a lot of volume resting or was executed inside this area. So your target of one-to-one dramatically gets reduced to like negative RR, making me sleepy. Let me see if I can tone it down. There we go. Just some subtle ambience. Ryan, I hope you don't fall asleep. So negative RR, you've got to be mindful of that area there. This volume could be pulled, spoofed. And again, it's a US index, you know, demand is in control. So we're shorting against strength if we were to short that. You know, even though this low is deemed weak because it failed to take out the high, this is not necessarily the right way to trade. So you have to be very careful because we've got this. Do you know what? I'm going to do a line because I'm doing too many boxes, doing too many demand boxes as color. We've got this. So we failed in demand here. We've come back up. We've then traded into the extreme, which is here, and then we've traded off. So if we were to go into the M5, we're probably short already if we traded the S&P. There's no volume. Remember, the US markets are closed. So you're just trading the overnight derivative. So look, 5 minute. So yeah, the 5 minute would be short now. And you would have got your one-to-one in, as you can see already. Trading it into at least this volume area, which is a little bit lower, which is here. And there's 2R. Trading down into the massive volume at the lows. There's 3R available. So yeah, maybe on the 15 minute we could have hit that short. I mean, it's going better. So yeah, there's a nice market's moving. We just need to be mindful of where it's moving to because we are bullish. Again, we could be seeing a lot of people taking profits trading into the weekend. I can't remember, was it here I had it marked? Yeah, it was, because it was about spot 3. So, you know, your RR's not there on this trade. So sometimes you just don't full set. Let's take a look at gold. Is anyone in any gold trades? Wow. It takes a brave trader to get short at those levels. Overextensions, capitalizing on the overextension of that move, capitalizing on the positive rhetoric that's coming out. Pivot into the move. And the expectation would be for price to come back. 4-hour gap risk, of course, we've got. bullish. So this is the bullish flag again. Look, bullish flag. Bullish flag. Initial target will be the flagpole extension, so we'd be looking at targeting this high. And now we're trading at the highs. You know, it's very difficult to trade at the highs. You know, what are you looking for? Okay, you've got that sweep to the downside, but we failed to break up, so there's no real structure. We're creating what we call a blow-off rounded top, which we covered yesterday. And of course, we're seeing price retrace, which it's looking like it wants to grapple something on this left leg. There's no structure developing at the moment on the right, so there's nothing for us to actually grasp true context on the 60-minute time frame at least. The 15-minute will show more color, but again, lower time frames, lower weighting, more difficult it is. Precision and betterment. We can see, of course, there's increment demand areas that are trading higher, which we've actually taken out. We've taken out all of these. So all of this internal was used as structural liquidity. So this would be, and you can see the difference. Look at the volume. Look at the volume in this area for this move compared to all of the volume on the move up. And then look at the volume from this morning in this area. So lots of positions being built. Yeah. So now I can't see gold trading down into 4800s at the moment, but it's the only logical area other than the retest of that previous break that I could consider getting long from if I was looking to scale into that trade. Let's bring it down. I'm just making it zoomed in for you all. So higher lows equal highs. That is crap. That is not the best. That's just a pause in price, but it is demand because you can see we've had the sell before the buys. It causes the pivot. We then trade out of it. We then come back in. We respect and we fail. So intraday traders may have taken shorts today. I don't like trading tops, but you can see there's volume and you can see that the momentum's kicking in. So I'm just looking to justify why maybe traders would have taken this trade. Again, for me, if I was intraday trading against the gold levels, then I would have been in about here. I wouldn't have been in anywhere here. I'm not that good. Targets would have been, give me 1 second. Targets would be this, which is that previous high that we broke. Doesn't mean it's going to get there. No, that's not always how trading happens. And I also don't like being short gold. Again, into weekend where we're experiencing a lot of geopolitical instability and political turmoil. I'm just trying to look at why we could get long. I mean, on the 5 minute, there's no. there's volume kicking in here, which again is in line with lower time frame demands after the sweep. So maybe they cleared out the liquidity and they were happy to start buying back into the market at this level. You can see the volume picks up here. You've got buyers stepping into the market alongside obviously some decent volume. You can't tell with CFDs on this particular chart. You need to be looking at the futures markets really to gauge what's going on, which maybe I'll introduce that next week. Because there's definitely buyers stepping in. I mean, you can see the volume on the way down this way. Obviously the volume kicks in for the shorts, buyers then kick in after we've taken out the internals. So yeah, nothing done on gold at the moment. Looking for lower prices to get long. If I am short as an intraday trader, then that would be the only area I'd have been short from. Because I don't see anything else other than maybe somewhere in here. I'm just looking at. So you could have actually got in. What time is this? You could have got in at rollover, which again, your spreads would have probably been higher with lots of firms, so you probably wouldn't have wanted to. You've got like, see, this is the subjectivity with TA and chart patterns. Look, lower high has been printed. We've then broke through it. Again, similar scenario. We've created a false break to the upside. We're now trapping longs into the level because lots of people would have got long on that breakout if they were targeting, you know, a new higher, with the expectation for that 49.70 level to go, 49.68 to go. So, but then obviously what happened is that demand failed here, and then people would have been looking for shorts. So had this have been respected, people would have been looking for shorts from inside here. So they would have got short again around that same area just earlier. So they would have had to sit through sideways drawdown before volume kicked in. So again, nothing done at all. Let's take a look at BTC USD as our last cross for the day. I don't think I've got it. No, I don't know. Give me 1 sec. I'll go on the Coinbase feed as well, just because that's the one I've been using for you all this week. Let's go 4 hour. Wow, we are hugging. So yesterday we were discussing how we've recovered into that area. We wanted to see obviously structure start to develop to the right, and which, as you can see, hasn't happened yet. We are hugging that lower area of support, which doesn't look great at the moment. You know, we've got the sweep or the break to the downside that hasn't materialized to trade higher. We've got higher lows trying to be put in, and inadvertently we've also got lower highs being put in as well. So the way this candle is currently trading, obviously it's, you know, a 4 hour candle. We have 3 hours and 15 minutes until this candle closure. At the moment, it looks like we're basing to trade higher. That doesn't mean that's going to happen. You need to see what happens on the, if you're looking at the 4 hour, we need to see what happens. But at the moment, we're ranging lower highs, high lows. No structure's giving us any clear direction of what we want to see. I want longs, but I'm not ignorant to the fact that this could go short. So if I'm looking at the 4 hour chart, I would be waiting for 3 hours and 3 hours 15 pretty much to get short. 3 hours 15 minutes for the candle to close. My apologies. So nothing traded back, nothing. Other than the highly volatile moves that we've seen this week and those expansive plays on the back of the data, the markets have really struggled to pick a direction. And I genuinely believe that is because of the uncertainty around Davos, around the tariffs that were previously announced, around the geopolitical tensions that we're ongoing with, really. The market is struggling to understand what to do. You know, we've seen risk sell off in Bitcoin and correctly move trading like the way it is now. We've seen gold trade off this morning, indices long, and Bitcoin is where we would realistically be able to find the most risk premium. So I would give this time to trade because we need structure. You know, we need to find clarity in the chaos. We can see that, you know, we've started to shape up. We've traded higher. We've swept this. We've then broken lower, but we failed to take out this low. So we're inherently contained within that range. Markets then internally created demand in control. It's then failed. We've swept, but we've done nothing. So again, 60 minutes is saying the same thing. Hold steady, hold cash. Internally, because you're trading a range, you can trade from the extreme. So you can short from up here, you can long from here. So if you're looking at trading the range, maybe you want to. If you believe we're going higher, then, and demand's not failing here, you could get in long. I mean, I don't like it, but inherently you'd be long. I keep saying inherently. So you'd be long from here, maybe protecting negative ATR 25s. You're targeting the extreme of the range. Is it worth it? Maybe that's your edge. If you think we are going to be holding these lows and we are looking for longs, then this is where you could look to get long. I mean, we are bearish on this momentum into here, but we're coming into the extreme of the range. So you've got so actually 1 second. Ignore that for a second, because this is that fake breakout. We could do a new line again. That's why it's so subjective. You could be looking for longs from in and around this area, which suggests price will continue moving down a little bit more, like this, and then we start to get that move back. But nothing done on Bitcoin at the moment. So a sleepy start to the Friday trading session. Does anyone have any other questions, any other queries, any comments? Okay, so I don't have much more to discuss. Let's quickly break down the econ for today. So, what do we have? We've already had Germany HCOB manufacturing PMI came out better than expected, 48.7 versus 47.8 and 47 respectively. In just under 40 minutes, we've got PMI flash from the UK, so that will affect sterling, so GBP. And we don't have anything else on the docket from an economic perspective today. Lots of earnings and revenue today. Lots of dividends today. Anyone holding some nice dividends? Nice dividend from this real estate investment trust. P&G, look at that. $1 per share. Nice. Any IPOs? But nothing else from me, really. Dollar index up spot 0.9. Yeah, I think Trump might. We'll never know until he comes out with some crazy rhetoric. Gold, silver up in the futures markets. Looks like most metals are mixed on indices. Mixed on risk. Again, expect some volatility to come out around the pound in less than 40 minutes time. Crazy. Other than that, everybody, have an incredible week. Enjoy the rest of your week. Have a wicked weekend. Remember on the weekend just to do some stuff for yourself. We don't get to walk and exercise as much during the week. So get your steps in, get outside, get your vitamin D in and your vitamin C, get your serotonin in. I've got a lovely weekend planned, a really lovely weekend. I'm going to be in the city tomorrow all day, the West End, not the city necessarily. I'm going to be in the West End all day tomorrow. I'm having a health and wellness day. I'll be training all day pretty much at the health club. So I'm very excited just to train all day. Train at the gym. I might do two major sessions, and then I'll do some recovery, maybe do some Pilates, go to the sauna, go to the infrared, steam room, spa, a lot. Thanks, Ryan. I hope you and your family have a great weekend too. And then back in the office pretty much on Sunday. So yeah, have a lovely weekend. If you're looking to trade on a personal account, then head over to seacrestmarkets.io/broker. You can open up a personal CFD trading account for a minimum of $50 deposit. Have a good weekend. If you're not already, like, subscribe, turn your notifications on, whether that be on X, Facebook, or YouTube. Look forward to seeing you Monday through Friday next week, same time every week. saying that there may be an adjustment to next week's schedule, as my wife is going into hospital over the weekend, so I'll need to take my children to school. But I'm going to cover that and we'll update it across everywhere. So you don't need to do the thinking. Let us do that for you. Make sure you turn your notifications on and we'll provide you with all of the updates in real time and notifications in real time as and when they are. But other than that, trade safe, trade smart. And for those of you that are new to the stream, trade Seacrest Markets. Have an exceptional trading day and an exceptional weekend. See you.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed time.